Well, good evening and welcome to this live stream on the 3rd of June 2025. What's happening to the year? It's going too quick. It's Martin North here from Digital Finance Analytics. Thank you very much for coming on tonight and spending some time with us. Great to see you there in the chat. And for those following along, of course, feel free to throw your questions and comments in. I'll just remind you that we're not providing specific financial or legal advice. It's the general conversation only. We do moderate the chat, but feel free to put your questions and comments in. If you have a particular question for Leith or myself, if you use Outwalk the World, that'll get it back into my queue and make sure I see it. You can also use Super Chat to get your question to the top of the list or indeed make a contribution to what we do around here. We really appreciate those who support what we do. We don't do this for profit. We do this because we think there's a really, really important conversation to be had. And frankly, given what's happening at the moment, it's probably never been as important as it is now. So there you go. Let me bring Leith straight in and we'll get going with the show. Leith, welcome, welcome. Great to see you back again.
Yeah, thanks, Martin. And hello, everybody.
Nice to see you on the show, Leith. And how you been?
Yeah, been pretty good. No complaints. Very, very busy. Look. I keep saying every year I'm going to take it a bit easier this year, and I never do. So I just seem to, I don't know, work longer, work harder. But I'm sort of, addicted to it, I guess.
Well, it's something a little alluring, isn't it? With all this data coming in, then trying to make sense of the data. And I said to you in the pre-show chat that you and I had, it's interesting how we've been parallel tracking a lot of these things, right? And we meet from time to time and we sort of have a heated agreement about quite a lot of stuff. So it is fascinating. And I guess tonight, I called this show the question of, what's happening to housing. And I made a show the other day, which essentially was suggesting that the problem with the financial pressures on people and housing is it's eating our young. In Australia, youngsters are getting, well, if they want to participate in property, then they actually have to get in hock and as never before. And look, frankly, there isn't a huge amount of things that they can do. You either stay out of housing, and a lot of people are, or you go in boots and all, but people are going in later. They're getting in more leveraged. And, the leech that housing is, and I think it is a leech. I think it's like a massive sort of blood-sucking animal on the body of Australia. And not only Australia, but particularly Australia. It really, you got to ask the question, where do we go from here?
Yeah, that's a beautiful summary you've just put there, Martin. I mean, unfortunately, whether you're someone seeking to purchase a home or you're seeking to rent a home, you're basically between a rock and a hard place. So, when we talk about housing affordability, and I've had this, debate with people, online, they often say, oh, look, it's not that bad, but they're always talking from the perspective of someone who already owns a home.
Yeah.
When we talk about housing affordability, we're talking about the cost of a new entrant into the housing market. So I like to think of it, say you're a 20-something-year-old living at home with your parents and you want to go out on your own. It has never been harder at the moment to purchase a home or to rent a home. And we can say that with data to back us up. So I don't know if you want to get straight into it, Martin, but there's an absolutely fantastic summary chart that CoreLogic, they're now called Cotality. I don't know why they call it that, but they've changed their name. And this was a snapshot. Admittedly, it is at the end of 2024. So we've had, a couple of rate cuts. But basically at the end of 2024, housing affordability across Australia, whether you're buying or renting, had never been worse at a national level. So, as Cotality or CoreLogic showed, the dwelling value to income ratio, this is for household income, was 8 times in 2024, which is an equal record high. And that's up from decade average of 6.7. It was, back in the 1990s, about 3. So the sticker price of a house is just ridiculous compared to incomes. The percentage of income required to service a mortgage was the highest on record at just over 50%. So we're talking about servicing a new mortgage for the median, someone on the median income. So the median price new home on the median income with a set, deposit. And so it was never more expensive to service a new mortgage. The number of years taken to save a deposit was at a record high nationally at 10.6. And the percentage of income required to pay asking rents on a new rental. So I'm not talking about the average rents across the housing stock using CPI rents. We're talking about a new entrant into the rental market was the highest it's been the highest on recorded record. So, and if you look across the individual capital cities there, which CoreLogic Totality has put, you know, if you're a Sydney sider, which I'm sure a lot of people watching today, it's absolutely dire. I live in Melbourne now, and because Melbourne's had prolonged period of weak house price growth compared to the rest of the country, affordability is actually pretty good here. Relative speaking, it's not great at a macro level. But if you live in Sydney, it's terrible. If you live in Brisbane or Adelaide, it's terrible. Across most of the country, it's very bad. And this, unfortunately, is a situation I can't see improving much. Like, the government can tinker around the edges a bit with their policies, and which we can talk about a bit later, and that can reduce the years taken to save a deposit, for example. But the other metrics, like the percentage of income required to service a mortgage, yes, interest rate cuts will reduce that a bit. But as these policies and interest rate cuts push prices higher, the metrics aren't going to improve much. So it's going to be difficult for Australians entering the housing market in the next 10 years at least. It's going to be very, very difficult for those people, especially relative to history. So, it's a pretty dire situation we've got.
Yeah, and just a couple of observations on this particular chart. Of course, I think this is based on household income.
Yes, it is. Yeah.
One of the big
median household income.
Yeah, but one of the interesting observations, if you look at now how two full-time workers are required, right? If you go back a couple of decades, you'd often find that it would be one part-time, one full-time, right? And in some cases now, household income comprises multiple jobs. So it isn't just maybe two jobs, but it's actually maybe effectively more than two jobs going into the household income pot. So this chart here doesn't actually take account of what it's done to people's work-life balance and everything else, right? That's the first point. The second point is, when you actually think about affordability, the age at which people get in to be able to buy a property is a lot later, on average 10 years later than it was previously. And that, of course, then has a huge on-flow effect, because you've got this massive debt burden later in life, which means that when you move into the retirement phase, you've still got the debt. So the consequences of this are way more than just, it's hard to get in. There's a bunch of stuff going on below the surface, which is really important.
Yeah, and also I'd argue that the quality of housing is arguably worse. So, people often talk about, the new McMansions and all this sort of stuff with, couple toilets and blah, 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 and all that sort of stuff. Well, if you actually look at it, the composition of Australia's housing stock is shifting pretty aggressively to apartments, especially in the major cities. So this is a dwelling price to income ratio, right? So as we shift more towards apartments, apartments make up a higher proportion of dwellings. So, the average quality of home, if you consider an apartment suboptimal to a detached house, is getting worse. Plus, the new housing developments are often further away, on the very fringes of a city. They're also on postage stamp size lots. So the size of the land now, the land parcels are absolutely miniature compared to what they were 30, 40 years ago. So I'd also argue that not only is housing getting more expensive, the quality is also degraded to a significant degree.
Oh, well, the quality of new builds is ridiculous. And I cover this with Edwin quite often on the shows. And, don't buy new is what I'd say, because quality of materials, the quality of construction, and all of those things are a problem. And it's interesting that if you look at the high-rise sector in particular, what you're finding is that the strata fees are climbing very much higher than people expected, because the remedial repairs and costs, which are now required, are much higher than people thought. So, in fact, economically, it doesn't make an interesting or a lot of sense. Now, there's an interesting little comment here, which is from Mr. Blister, and he said, from my understanding, two other Commonwealth countries with bubbly housing markets, New Zealand and Canada, have seen housing prices fall this year. Now, let's talk about New Zealand, because that's probably close to Canada, although I know we track Canada as well. Do you see Aussie doing likewise? Now, New Zealand, two factors. One, they dialed back migration. Two, they've tightened some of their lending, and they've loosened them a little bit, but they've tightened their lending standards relative to what we're doing in Australia. So
actually, there's three.
Okay.
There's actually another one, Martin. They also brought in negative gearing reform. So back in, I think it was 2019, they basically did what Labor here wanted to do years ago. And that didn't actually help initially. So New Zealand, despite the fact they brought in negative gearing reform, basically quarantined negative gearing losses, so you can only claim it against your income, not you couldn't claim your property negative gearing losses against your income. You can only claim it against future gains, which is sort of what Labor promised for established houses. Despite that, New Zealand went through one of the biggest house price booms in the world after that policy came in, which is a bit counterintuitive. But then the Ardern government actually banned. They went the whole hog further, and they actually banned the ability to claim mortgage losses on your rental properties. So that was a huge change, and I think that's also taken a bit of steam out of the market.
Yeah, absolutely. And interestingly, the latest data shows that prices in New Zealand are back to where they were quite a few years ago. Affordability
pre-pandemic
is a little easier, but house prices and house trading volumes are still relatively low because people are still stuck, despite the fact that New Zealand has cut rates significantly relative to Australia. So it shows you that there's an interesting connection between interest rate movements and the housing market, but it's not the only lever, right?
No.
The migration lever and the tax break levers are also very important to understand in terms of their consequential impact on property. And
absolutely, and we saw that during the pandemic. Sorry to interrupt, but when the Reserve Bank lifted interest rates from 0.1% to 4 point, what was that? I'm forgetting now. Oh my God, what did it peak at again? 4.35.
Yeah.
Sorry, a bit of a brain fade. So it was a massive increase, 4.25% increase. We actually had prices fell initially, but then they rose. And it was when we had this massive rebound in immigration. The biggest 1 million people in 2 years. That then pushed prices up, despite the fact that we had massive monetary tightening, and the average cost of mortgage repayments went up about 50%. So yes, interest rates certainly have a massive impact, but they're not the only factor.
Yeah, absolutely. And the migration question in New Zealand is quite interesting because they did deliberately turn the dial down. There is some migration, but there's quite a lot of exiting from New Zealand too, right? And guess where a lot of those from New Zealand are coming to?
Australia. Look, I'd argue that the residents leaving New Zealand would tend to be more highly skilled, probably, more established. Whereas the people coming into New Zealand through the migration scheme tend to be your students and that sort of thing, and lower skilled and a lot younger as well. So they're probably losing a lot of prime age residents to places like Australia, looking for, better, basically more income, because Australia pays more.
Yeah.
And the cost of living, as bad as the cost of living here is, in New Zealand, it is off the charts. I remember about last year looking at a comparison of costs between Woolworths in Australia versus New Zealand, and the price of like milk and eggs and all that sort of stuff was insane in New Zealand. So I think people are, obviously coming across the pond because they can earn more money in Australia and basically have a better life, which is kind of funny to hear when you're an Australian and you think that it's gotten a lot worse here. I guess there's, it's always relative.
Mm-hmm. And Cookie Boy asks about negative gearing. Should that be one of the things that are wound back? And other tax reforms, I guess my perspective is I think there is some fruitful areas to explore there, despite what Labor's saying. But it's probably not the biggest game in town.
No, it's not. But then again, if you look at what's happening in Victoria, so Victoria hasn't obviously got rid of negative gearing, but they've done a punitive tax regime on property investors. And as a result, Victoria's the house prices growth has been so far below the other states. And I think if that happened at a national level, the impact wouldn't be as big, because when only one state does it, you get a flight out of that state into other states, right? But if we all do it, well, then you lose that option of just, I can just invest in Queensland, South Australia, whatever, WA instead of Victoria. But if there's a blanket negative gearing thing, you won't get as bigger impact, because the alternative won't be as simple, if that makes sense. But regardless, I think Victoria sort of shows you the types of impacts you could have if you restricted negative gearing and, got rid of the capital gains tax discount, brought it back to its pre-1999 state, which is probably what we should do. And, we would get some, obviously, less upward pressure on house prices, or depending on the cycle, downward pressure. And it certainly would help on the affordability front, and also save the government some money too. Let's face it, it'd give the budget extra money. It's not a bad idea.
Absolutely. And just while we're talking, let's talk about Canada, because Jake asked about the migration. Of course, they did dial back migration in Canada, right? And one of the reasons why prices have actually moved the way they have. They also did some further, some further restrictions there as well. And as I was going to say, rents are also going in a different direction. So it shows you that there are levers that do have a significant impact on property prices if governments want to use them.
Yeah, and unfortunately, Australia, as we'll talk about in a second with the policies and et cetera, is going the opposite approach. So instead of pulling the levers to make housing more affordable and making quality of life better, and basically getting off this Ponzi train that Australia's been on for 20 years, or 25 years with property, but with immigration 20, we're doing the opposite. So our government has no will to actually change things. And if anything, they want to pour more petrol on the bonfire and just make the situation worse, make our productivity worse, and ultimately make our living standards worse. It's completely ridiculous. And I could go into other areas like energy, which we can talk about later as well.
We'll probably get to that, but let's stick on the housing theme for a moment.
I don't want to jump ahead.
No, exactly. But one of the other questions then is what the RBA is doing. In fact, Cookie Boy threw this in. Could increasing property prices stop the RBA from cutting in the future? It's interesting that Michelle Bullock really washed her hands of house prices. She said, look, it's not really our bailiwick. We respond to what's happening, but we don't actually look at them. And
I'm saying I think that's fair enough too. I mean, look, this is a responsibility of the federal government, and also the federal government could tap APRA on the shoulder and do some macroprudential, rule type tightening, which is what New Zealand's done. And you could get the RBA would then be freer to cut interest rates if they see fit, without worrying about it, just blowing the housing bubble bigger. But unfortunately, there's just no will in Australia to do that.
No, absolutely. And the consequences of that is that it's getting harder and harder. Let's just talk a little bit about, your perspective on RBA future rate cuts, because the minutes of the meeting came out today, and I thought that was quite interesting because they basically discussed these various dimensions, said that the local situation probably warranted a bit of a cut, but it was the global situation and the uncertainty. And I think uncertainty was at 134 times in the statement on monetary policy, I think. Some stupid number suggests that they actually were wanting to sort of take account of this global uncertainty around Trump and everything else. But the markets are still quite convinced about future rate cuts, aren't they?
Yeah, absolutely. So I've got the chart of the financial markets rate cuts. That's the one on the left. So this is as of close of business Monday, right? So Tuesdays I don't think it hadn't updated yet for close of business today, but as of Monday, financial markets had tipped 3 more rate cuts this year, and an end of year cash rate of 3.1%. So we've already had 2 this year. So in February, 0.25. It's still this month. Sorry, last month. We're in June now. Last month we had 0.25, and the markets are tipping another 0.75%, 75 basis points of cuts this year. And this would imply, and this is rough, I just put it into a mortgage calculator with a given amount and worked out what the difference is. It implies a 12% decline, further reduction in monthly principal and interest mortgage repayments from their peak. So obviously that would, boost borrowing capacity and make it cheaper to buy a house, and would bring forward demand. And I've got a chart there from the right. On the right, this is from the AFR, where they basically charted what happened to house prices 2 years after the start of rate cuts. And, every time it has led to a pretty decent jump in prices. Now, these rate cuts on their own, I don't think would have as bigger impact as, say, the last time. Definitely not, because the cuts won't be as deep. And also we're starting from a much higher level. So last time we got a 27% increase in prices, after the COVID cuts. I don't think we get anywhere near that again, but just based on this alone. But, we probably get double digits. And this is just the fact of the matter. Lower rates equals obviously lower mortgage repayments, but also increased borrowing capacity, and that tends to push house prices higher. I mean, it's just logical. And obviously, rate hikes tends to push them lower. Although this current time, the last time we obviously had a massive immigration spike, which counteracted that. So, lower interest rates equals rising prices. And then January 1 next year, we have the Albanese government's 5% deposit scheme for first home buyers. So they'll just give it another kick.
Yes, wherever you look, there are more incentives to try and pull forward the prospective buyer. And interestingly, of course, the question of supply will come onto that, I guess, in a moment or two. The question, of course, is that all of this debt, and think of the pile of debt. It's interesting that credit, according to the latest RBA stats, is growing at 5 or 6% per annum for housing, right? Which is a lot higher than inflation. So that people are getting more indebted net overall. Now, some of that's investment, some of that's unoccupied. So the debt pile is growing. And I suppose the other observation here is that whilst the cuts are sort of in the market's mind, long-term bond rates are doing something rather different, right? And there's a big question about how this is going to play out because, of course, we've seen long-term bond rates in the US, in the UK, in Japan, and even in Australia move up. And that may be sort of suggesting that there's something else going on. And I wonder to what extent the current media coverage of, prices are going down because of all these rate cuts, is missing some of the other rather important factors.
Yeah, it could be. And it's also worth pointing out that the fixed rates have been falling for a while now in anticipation for rate cuts. So we actually already have had some more stimulus into the market just in those fixed rates. Although I think in Australia, most Aussies, the variable rate is the biggest reference rate. So yeah, there are other factors, and but I think most people who are buying a house would know that rate cuts are coming. They know that these stimulatory policies are coming. That's probably already helped to boost demand. Although with the federal government's first home buyer 5% deposit scheme, that could actually lead to some first home buyers perhaps delaying their purchases until the start of next year, possibly just to take advantage of that. There are a few swings and roundabouts, but I think with the lower rates plus the stimulatory policies that are coming, we're going to have a pretty strong 2 years for property prices, which just means less affordable housing at the end of it, which is just crazy.
Well, let's look at some of those stimuli policies, because when you list them out, and you've got a beautiful slide that really shows that quite nicely, so we'll put it up there. You can start with Labor's 5% deposit scheme for everybody for first-time buyers, right? We've got messing around with student debts. We've got the shared equity scheme. We've got longer-term mortgages. Spot the stimulus.
Yeah, it's crazy. So I can't remember if we talked about this last time I was on, because I can't remember that. So Labor's got this 5% deposit scheme for first home buyers. So effectively, it's going to come in 1 January 2026. Now, I think it was last time on here, I likened it to a state-sponsored subprime mortgage scheme. Now, I was being a bit cheeky. It's not subprime. I guess technically is you're giving loans to borrowers who don't meet the don't meet the requirements for responsible lending. But it is kind of like that. Like, instead we're going to be giving mortgages to people who don't have a big enough deposit to meet traditional loans. So the way this will work is Labor's basically said every first home buyer, so this is for buying a new home, an established home, the price caps are really high, so it's going to capture just about all first home buyers. They've said that the taxpayer is going to guarantee 15% of a first home buyer mortgage. So that will allow them, instead of having to come up with a 20% deposit or less than 20% plus lender's mortgage insurance, they'll only need to come up with 5%, because the government's going to backstop the other 15% to provide the banks with that 20% deposit effectively. And so it's just going to bring a whole bunch of marginal borrowers who wouldn't be able to get in otherwise into the market. It's also going to mean that first home buyers, so some of them who could have met the old 20% rule might just go for a much bigger loan because they only need 5% as a deposit. So they're going to increase their borrowing capacity. And obviously more first home buyer demand means higher prices, right? This is going to be capitalizing the home prices. And what it means is that for the first movers, the first tranche that get in, they'll probably do okay out of it because the prices will rise or whatever, and they'll get in before prices have risen. But if you're a first home buyer in 5 years' time or something, you're going to end up in a much worse position because prices are going to be higher than they otherwise would have been. And you'll have to use this 5% deposit scheme to get in, and all you end up doing is paying higher prices, carrying more debt than you otherwise would have because you paid those higher prices, and you only have a 5% deposit, not a 20% deposit. So you got a much bigger mortgage, and you're going to be on the hook. And your effectively affordability's gotten worse. We're going to have, at the end of this whole farce, we're going to have a more expensive housing market with Australians carrying more debt than they otherwise would, which is just completely counterproductive. And this is what happens every time we have bigger mortgages. You can see in the bottom right side chart from Alex Joyner, average loan size and median dwelling prices always chase each other up. All right, it's chicken and egg debate, which one comes first. Does the bigger mortgage, people taking out bigger mortgages pushes up prices, higher prices requires people to take out bigger mortgages, but whatever, that's going to be the end result. On top of this, the Albanese government announced that they're going to exclude student debts from loan serviceability calculations. So if you've got a HECS debt, the banks won't have to look at that anymore, and that's going to increase borrowing capacity. And the graphic in the bottom left-hand corner comes from Compare the Market, and that shows the borrowing power boost from this policy. So if you're on $100,000, and you've got student debt, and the lenders don't have to look at that student debt, you'll be able to borrow $56,000 more. So again, more borrowing capacity, more fuel on the housing bonfire, higher prices. The government also expanded their shared equity scheme by, I can't remember the exact number of places, but that's just more buyer demand. And then on top of these policies from the government, we've also seen we've seen a couple lenders also implement new stimulatory mortgage products. So we've seen the loan terms in Australia used to be 15 years back in the 70s. They then went to 20 and then 25, 30 is now the norm. Now lenders are starting to offer 40-year mortgage terms. And what that does is it basically reduces your monthly repayment because you're amortizing over a longer time period, which means you can borrow more, but it means you're also paying back your mortgage for a lot longer. If you're like me and you pay as much as you can, you'll pay it off quicker. But if you just stick to your scheduled repayments, you'll be paying your mortgage for a lot longer. You end up paying a lot more than you would have otherwise. And then AMP also last month introduced a 10-year interest-only terms without reassessment for investors, for first home buyers, for people buying established homes, basically for everyone. Now, again, if you can borrow for 10 years interest-free without having to do another assessment during that period, that's just going to bring in more borrowers again. So basically, this is just mortgage fuel on the housing bonfire. And the last thing the Australian housing market needs, the last thing the economy needs is bigger mortgage debts, more expensive housing. I mean, I wish I'd included in this chart pack, but the value of Australia's dwelling stock is now about $11.3 trillion. The average price of housing of all dwellings in Australia, so we're talking regional areas, the back arse of Buggery and Sydney combined, houses, units, bedsit apartments, etc. The average value now is $1 million for all homes across Australia. So if you divide the number of homes, 11.3 million by 11.3 trillion, you get 100,000 average. Do we need that to go higher? It's already expensive, ridiculously expensive. But these sorts of policies are just going to push that up. So in 5 years or, a couple of years, is it going to be 13 trillion? Is it going to be 14 trillion? I don't know. But ultimately, these policies are red rag to a bull for a housing market. This is going to mean more mortgage debt and more expensive house prices, and they're ultimately self-defeating from an affordability perspective. They're also self-defeating for the economy because we're going to have the more capital, more credit going into housing rather than just productive stuff, which is what we should be doing. So
yeah.
It's just,
and that's really the point. So, you can look at all of the charts and you can see the pivot away from investment into business lending towards housing lending. It's 2-to-1. Now it's reversed, right? And you can also see that if you look at the distribution of that debt, the housing debt, it's quite interesting because not everybody's equally leveraged up. And in fact, we have quite a few older households, the baby boomers and generation around there, who are sitting on quite large price tickets without actually any mortgage. So it's not I always get frustrated when they divide one number, the whole of the population, by the other number, the whole of the debt, and say, see,
Yep.
no, that's not the way to look at it. You've got to look at those who are actually, leveraged up versus not. And there is an interesting question. In fact, the question came to mind here when Dylan asked, what about the fact that we've got boomers who probably are playing into this? Now, that's true. There are quite a few baby boomers and, the older generations who are sitting on very large properties with significant value attached. Is it real value or theoretical value? I'm not sure, but there is value attached. And it's interesting. I think the Productivity Commission identified something like 6 trillion of intergenerational wealth that's going to shift over the next decade or so, or maybe a bit longer. Now, that's going to have an interesting impact as well, because, of course, what it means is that there will be some people who will be able to benefit from that intergenerational wealth shift and will be able to play this game. But if you're actually in part of the market where you don't have the same access to family mother, either by the bank of mum and dad or, through people falling off the perch and those things, then you are more and more excluded. And so you have this greater problem between the haves and the have-nots, the cans and the can'ts. And what you're doing is creating, I think, a social division, which is really quite serious.
Yeah, absolutely. So basically, if you want to get ahead in Australia, you got to get yourself wealthy parents. I mean, but obviously, I'm being sarcastic because you can't choose who your parents are. But really, that's the sort of economic system we've created here, isn't it? So it's an intergenerational wealth transfer system, and we used to be a egalitarian country whereby you could, housing was affordable. You could basically, grow up. You don't have to go to uni. Just grow up, get a job, buy a house, get married, have kids, whatever. Like that. That was, and it was pretty much available to anybody. There's always, obviously, there's always some people that are poor and some people that aren't. But now that's just that basic sort of generational bargain that's been broken, and it's not enough now just to, go to school, study, whatever, get a job, and then expect to be able to afford a house at some point and raise a family, etc. That's almost becoming a luxury. So, it's sad. It's a sad state of affairs. And I've said before, I've got a 17-year-old and a 14-year-old about to turn 15. And, I worry about them, but, lucky for them, they'll get the bank of mum and dad from me. So, I'm been squirreling away money for years because I'm a tightwad, and thinking about what it's going to be like for them in the future. So, but a lot of people aren't in that position, and it's unfortunate.
So Adam, who of course says, well, the answer is Bitcoin, which is an interesting observation. And, as when I have some very interesting conversations around the way that fiat and Bitcoin interact. So there's an interesting observation. I will make one other point, and that's if you think about this carefully, and you sort of think about this massive wealth accretion that we've got, inheritance tax has to be something that the government's got to be thinking about in some way. And as Mr. Bill said, it's in the UK at the moment. In fact, they changed some of the parameters quite recently to grab a bigger share. So, in the UK, if you actually have over a certain amount, then the government gets give on average half, right? So there's in Australia we don't have that, and that means that the wealth transference is perhaps more likely to come. There's also this unrealized capital gains question, which is another tax policy, which of course is being spoken about in the context of superannuation at the moment. But I don't know what you think about that, Leith. But to my mind,
I'm actually against the unrealized bit. I think definitely super taxes should go up, and I think just simply double it to 30% for not even $3 million balances, do it for $2 million, which is more the Greens thing. But that's on actual earnings within the fund. So whether it's dividends, interest, rents, whatever. And the other way we should do it is instead of doing the unrealized thing, which is not just incredibly complex, but has a lot of issues. You've got unlisted assets and all this other stuff, and don't add that complexity. Just double the tax from 15 to 30%. The existing tax that already is there, and also on the super contribution side, instead of having a 15% flat tax, just make it a 15% flat deduction. So if you're on the top marginal tax rate and you, at the moment, if you're in over 250,000, you effectively have to pay 30% anyway. But if you're on, say, 200, right, and you're on the top marginal tax rate, and put money into super, you pay 15% contribution tax, so you get basically a 30% tax deduction. We'll just make it the marginal tax rate minus 15%. That means if you have the lower end, you get a bigger, it'll basically mean that the tax scales for superannuation are progressive. They'll just be your marginal tax rate minus 15%. And it'll be better, it'll be more equitable, because at the moment under the flat tax system, if you're on if you earn, say, 50 grand, and you're on the 30% tax rate, whatever, you get a 15% discount when you put in money into super. But if you're on 200, you get a 30% discount. Well, why not make it just a 15% flat deduction? And then that way it becomes progressive. The federal budget would save billions of dollars. Lower income people would save a bit more super because they're getting bigger tax cut. Higher income people wouldn't get as big a tax deduction. And you would improve the equity and sustainability of the system. So I think just doing those two things alone would be better. And pretty much what I'm suggesting is kind of what the Henry Tax Review suggested, rather than doing this unrealised stuff, which I'm not really a fan of. I don't think we should go down the road of taxing unrealised gains, and especially paper profits that may never be realised. And also, it's just extra complexity, and there's just simpler ways to skin the cat. And I think, unfortunately, Labor risks throwing the baby out with the bathwater on this, because there's such a backlash against the unrealised component that you might end up getting no reform, when they could have just taken more simpler options that are more defensible. And I think even the super funds and everything were expecting the tax to go up, but they just weren't expecting the unrealised component. And I think just get rid of that and do the other stuff I said. Put the threshold down to 2 million, index it. It's got to be indexed, because at the moment the 3 million isn't indexed, which is ridiculous. And Bob's your uncle. I think that's just the way to go.
Yes, well, it's clear to me that this unrealised tax, and by the way, some other governments around the world have already gone down this route, but it is very complex. And interestingly, of course, they'll calculate a theoretical gain over the year, allowing for inputs and outputs in some circumstances. And that will then be a bill that you get billed. But if, in fact, the next year it goes down again, you can't actually get a refund. What you have to do is to hold that loss against future earnings. So it's a very asymmetric process. And the other point, whilst it's within the superannuation envelope at the moment, if they get that through, the chances are they'll think, oh, well, I could do it in other areas like outside superannuation. And people do have houses in superannuation. But if you don't have liquidity in the superannuation fund, how do you pay the tax? So
that's right.
It's madness, I think, to go.
And also, if you've got a liquid asset, so you've got, say, something that's not market traded. Well, how do you value that? Like, I can tell you, if I put my home in the market, obviously it's not in my super fund. I'm just using an example, right? It's a liquid. I don't know what I'm going to get for it. So you can get valuers come around. Oh, I think it's worth this much, whatever. But it's just and then there's a shortage of valuers to actually do this work. And then the fact that it's got it would have a 1 July start date. And that would be, everything would start from a zero balance of that. Well, what happens if you've got an asset you've basically lost a lot of money on it up to that 1 July thing, and then the asset rebounds in value, but it's still below what it was, and you're charged on that gain, even though it's still underwater. Like, it's just kind of stupid. We've got an existing system that taxes earnings and super at 15%. Just double it for larger balances, because the funds already know to do it. It's just basically doing exactly what you've just done, but twice. That just seems like a smarter thing to me.
Simpler and more straightforward and less contentious.
And save money.
Yeah, absolutely.
Yeah, save money. And then also it means that there's less incentive to hold large balances in super, because you go, well, what's the point? Like, I'm not getting any benefit from keeping it outside the super system. So, that just seems like a much simpler way to do it. It makes it more equitable. Government makes more money. Do the contribution thing, like I said, just a 15% deduction from your marginal tax rate, rather than 15%, just paying 15% tax. And then obviously if you earn over 250, then it goes up again.
Yeah.
But just keep it simple. And you can get a similar result that you want with less complexity and just a better outcome, I think. And for this reason, Martin, Ken Henry, who former Treasury Secretary who did the Henry Tax Review, was against the unrealised capital gains tax as well. He said that he was against it, and that we should just revisit the Henry Tax Review, because it had the solutions in there, but the government just wants to reinvent the wheel and add a whole another layer of complexity. I don't get it.
No, I agree. Well, the Henry Tax Review was a pretty good piece of work, but of course, nobody actually ever picked it up. Now, let me just highlight something else before we get on to this issue of supply, because a really interesting comment here. No wonder no one wants to have kids anymore with this mess. And Alison said, we've decided not to have children. The point is, one of the things we've got is a falling birth rate. And one of the reasons migration is so high, people are postponing household formation. They are actually having less kids because they can't afford to have less kids. So there are actually social consequences of all of this. You've got more people who are spending a greater proportion of their income just to either pay a mortgage or to pay a rent, which means they're not spending as much. This is one of the reasons why the momentum in the economy is very weak at the moment. And so there are some profound consequences on the broader economy and on the social fabric of Australia because of this bad set of policies around housing.
Yeah, absolutely. Look, expensive housing is like a lifetime tax, right? So, you spend a much higher share of your lifetime income to put a roof over your house, over your head, I should say, than other generations have. And so it's just like this massive drain on your financial well-being going all the way to the day you die, because it also affects your retirement as well, because you can't, so it's just a huge drain. It makes everything harder, and it's just so unnecessary. And, I'll argue that we'll get onto it later. I'm just as a little bit of a precursor. I'd argue that, Australia giving itself expensive energy is exactly the same. It's just dumb. Like, we didn't have to do this. But through policy malfeasance and, this ridiculous Big Australia policy is just another driver. We've decided to make lives hard for ourselves. And it's just, and also created massive inequality as well, whereby some have been made incredibly wealthy out of this, but it's come at the expense of the broader populace.
Yeah, and of course the beneficiaries are the banks, and the banks' balance sheets are growing ever bigger. The loan pools are growing ever bigger. The shareholders, are celebrating that. And it's interesting, margin compression is still happening within the banking system, but because of the top line growth in lending, they can still, drive it forward. But I always remind people, effectively, what you're doing is your future cash flows is what the bank is banking on, right? So, more and more and more, all of these people paying the mortgages are effectively providing the income streams to the banks, and that effectively goes through to the shareholders. And this isn't productive lending, though. One of the reasons, and we'll come onto this in a second or two, but productivity is absolutely languishing. One of the reasons why it's languishing is because a lot of this borrowing is non-productive. It's just inflating the numbers higher, but it's not actually producing anything more other than bigger numbers. Or the other way to look at it is the value of your dollar is being devalued by the amount of extra money that's being created because of the debt that's being created because of all the growth in prices. So this is an unproductive set of activities.
Yeah, it's fake wealth too. So, Australians are often held up as being some of the wealthiest households in the world. I think we ranked 2 in the Credit Suisse Global Wealth Report, but it's mostly fake. It's mostly fake because, as I said, the average dwelling value in the nation is $1 million, right? Is that real wealth? I mean, the house that I live in is probably worth over 2 mil, right? Notionally, but I had to pay massive amounts to get into it, whatever. I would have been much better off if it cost half as much as I paid. I'd have my mortgage paid off already. And if it was worth half what it is now, I'd be better off. But instead, I'm still paying a mortgage. And really ask yourself, are you better off? I'm notionally wealthy, but you don't feel wealthy just because I'd be living in this house regardless of whether whether it's worth 200 grand, 300 grand, 400 grand, 5 million, 10 million, whatever. It's still a house. And if I need to move to another house, you got to sell and buy in the same market. So you end up just paying more stamp duty for the next place. You're actually better off. So, most of Australia's wealth is fake because it's held in illiquid housing, which is really a consumption good unless you own investment properties, obviously, then it's real wealth. But if you're just an owner-occupier living in a house, it's just a house. It's there to provide shelter for you. And it shouldn't matter what it's worth because while you're alive and you live in that house, you need somewhere to live. But the way the wealth statistics are calculated, they go across our housing stock, our shares, etc. They divide it to get an average, and they go, oh wow, Australians are rich because they've got these uber expensive housing market and these really expensive homes. But it's fake wealth, because you'd be just as well off you'd be better off actually if you paid 1/3 what you did for your house, and your house was worth 1/3 as much now, because you wouldn't have to go into massive debt to buy it, and you wouldn't have been chained to your mortgage for a decade plus or whatever it is. So it's just totally non-productive fake wealth here.
Absolutely. And this fake wealth could be seen as another plug for Bitcoin, of course, because the idea there is that it gives you a bit of a firmer anchor. And look, I keep saying the way to think about house price growth is to think about the devaluation of the dollar, right? So the effective purchasing power of the dollar is going down and down and down and down for all the reasons we've discussed. And the other point that was made in the chat to Leith is, of course, that childcare costs are also very high too. And that's on the back of, a lot of the stuff that's going on below the surface. So effectively, it's really difficult to be able to actually find a way to be able to build a family and, cover all the costs there too. Now, one of the other interesting observations is, of course, the lack of property supply. And this is a very, very important conversation that you've got some very nice slides on. So, I'll let you take your long run and give us the latest Leithian view of the housing supply conundrum.
Yeah, so this is a very interesting report that was released a few weeks ago from the National Housing Supply and Affordability Council. Now, they released their 2025 State of Supply report. So it's an annual report they do where they basically look at their 5-year ahead projections for dwelling construction. And then they work out, over that 5-year period, are we going to have a surplus or a shortage of homes, etc. So as we know, the Albanese government has got this fantastical target to build 1.2 million homes over 5 years, which requires 240,000 homes per annum. Nobody believed this is possible, right? So Australia's best ever year of housing construction was about 223,500, I think, in 2017. It's in the chart there in the middle. And that there was about 7% below Albo's fantastical annual target, right? So we've never been anywhere close to that before. And currently, construction rates are tracking near decade lows at about 180,000. So again, about 60,000 below their target. And the National Housing Supply and Affordability Council released their projections, and they said, guess what, Albo? You got no hope of meeting that target. So the council forecast that only 938,000 dwellings would be built nationwide over the next 5 years. So over the 5-year period from July 1 last year, which is when the target started, to mid 2029. And that's 262,000, just over 20% below Labor's target. And I put in that Albo's housing target chart, you can see the green line. That's basically their forecast. And as you can see, it's going to miss by a mile. To make matters worse, the National Housing Supply and Affordability Council plugged in the federal government's own population projections from the Centre for Population, which is run out of the Australian Treasury. And they then worked it out against their construction targets, less demolitions. And this is the bottom left table there. And they worked out that over we had a shortage, so an undersupply of 86,000 in 2023-24, but that was before the target started. But they worked out that over the next 5 years, so I should say the current year we're in now, 2024-25, and the following 4 years, they worked out that Australia would have an undersupply of 79,000 homes. So this housing supply situation, according to the government's own advisor, is going to get worse. Now, I didn't put the chart in here, I wish I had, but Shane Oliver from AMP forecast a couple of months ago, he estimated Australia's current undersupply to be somewhere between 200,000 and 300,000 dwellings. So you can add that 79,000 to 200 or 300,000. And that gives you an idea of the scale of shortage that we're missing, that we're going to experience. Now, here's the real kicker here, Martin. The bottom chart on the right, so below Albo's housing target chart, this is absolutely critical, and this was buried at the back of the report, and I don't think anyone other than me actually picked this up, but I've been hammering it pretty hard. The government's own council confirms that the best way to solve the housing shortage, they don't say it in the report, but you can see it in the numbers, is to actually cut immigration. Because that chart on the left-hand panel and the right, you can see they do a sensitivity analysis where they say, what happens if population growth 15% stronger than what the Centre for Population predicts, which is the baseline forecast? And what happens if it's 15% less? Here's the thing. If Australia's population merely grew at 15% less than the big Australia settings set out by the Centre for Population, which is ongoing high immigration, instead of having a 79,000 shortage over 5 years, guess what? We'd actually have a surplus over those 5 years of 40,000. So that there is proof positive coming from the government's own council, Supply and Affordability Council, that the number one solution to Australia's housing shortage, as I've been saying for years, is to cut immigration, right? Slow immigration. And this is only 15% slowdown in population growth. So still, the population is still going to be growing very strongly. It's just going to be a little bit less strong than what they predict. And if we just did that over the next 5 years, instead of underbuilding by 79,000 dwellings, we'd actually overbuild by 40,000. So we wouldn't have a surplus of homes, but Shane Oliver's 200 to 300,000 cumulative shortage that we currently have would be reduced by 40,000. And what do you think would happen if we actually cut immigration right back? We wouldn't have a housing shortage anymore. So this is just crazy stuff here. We keep getting gaslit that housing supply, it's all a supply problem. We need to magically, totally unrealistically build more homes. The government's own advisor doesn't think that's possible. The Housing Industry Association released their own projections, which I haven't included here, but I wrote about Macrobusiness. They don't think it's possible. Masters Builder Australia doesn't think it's possible. Urban Task Force. Nobody believes that this is anywhere near remotely possible that we can meet the Albanese government's housing target. And the government's own advisor has said black and white that they're going to miss it by 262,000 dwellings over the 5 years. And if we just cut population growth by 15%, not even a lot, guess what? We'd actually build more homes than what we need for that population growth over that 5 year period. So it's pretty basic stuff here, Martin. But unfortunately, the latest figures from the various figures suggest that, guess what? Immigration's actually rebounding again. So I've got some charts here as well. So what the official data showed, so the quarterly population series from the ABS is only current to September last year. And what it showed is that, and that's the top left. This is from Justin Farbo at Antipodean and Macro. If you look at the black line there, that is the official net overseas migration forecast up to September last year. Now, there's a corresponding series from the ABS, which is current to March, and that's their monthly net permanent long-term arrivals data. And it tends to track net overseas migration very closely, as you can see by Justin Farbo's chart. And what it's shown is that at the start of this year, the first 3 months of this year, net overseas migration is actually rebounded. But based on this figure and based on this series, which, as I said, tracks very closely. And not just that, the top chart to the right of that, the civilian population aged over 15 years, that I grabbed out of the monthly labour force released to April. You can see the population growth in the first 4 months of this year is also accelerated. So it was tracking at about 0.4% quarterly growth. It was tracking at 0.4% towards the end of 2024. It's now rebounded to nearly 0.7%. So according to these two series, immigration's ramped back up. The chart over from the right of that, the net overseas migration working age population, that's basically the same civilian population in annual terms, plotted against net overseas migration. That's from Alex Joyner at IFM Investors. You can see that there's been a little spike in the annual rate, which is shown up there. And also just to the right of that, the far right, we've got rental vacancy rates. This is from CoreLogic. Again, Justin Farbo charted this yesterday. And it shows that the rental vacancy rates tick lower at the start of this year. So it was sort of starting to rise up a bit at the end of last year. Now it's swung back down. And I think that relates to this rebound in immigration. And here's the upshot. So the National Housing Supply and Affordability Council says that if you want to solve the housing shortage, cut immigration, right? Slow population growth, pretty obvious stuff. Just below Justin Farbo's chart on the left, the far left, I've got the long-term population projections for Australia. It's that little narrow, table. Sorry, I've stuffed a lot on this page. And what that is, that's from the Centre for Population's December 2024 population statement. And what it showed is that the federal government's own population projection advisory agency from out of the Treasury forecast that Australia's population is going to grow by 13.5 million people in the next 40 years, right? So 13.5 million people in the next 40 years is the equivalent of adding another Sydney, another Melbourne, and another Brisbane to Australia's current population. So if you think of Sydney, Melbourne, and Brisbane right now, every dwelling in those three cities, every piece of infrastructure in those three cities, water supplies, energy, everything, all that is going to have to be replicated in Australia in the next 40 years to stop housing getting worse, to stop livability getting worse, to stop productivity from getting worse. It's just an impossible task. And effectively, what we have here, the federal government has engineered this housing crisis, not just through dumb policies like negative gearing, capital gains taxes, blah, 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 but also just by engineering massive population growth. So the bottom middle chart there, that it only goes to 2023. I think it's mid-2023. It's from the World Bank. But I wanted to put, plot Australia versus these various other countries. And, between 2000 and 2023, Australia's population grew by 40%, which is higher than anywhere else in the advanced world. And in fact, if you took the current population of 27.7 million, I think it is, using the ABS population clock, which is updated daily, we've actually grown our population by 46% since the turn of the century. So that's obviously pretty old data. It's now 46%. Is there any wonder that we have a housing shortage? We've literally grown the population by 7.6 million people this century alone, which is like 1.5 Sydneys. No wonder we have a housing shortage. In 24 years, just over 24 years, we've added more than like 1.5 Sydneys to Australia's population, which guess what? Required 1.5 Sydneys worth of housing. Pretty difficult task. Now, what I've done on the right-hand side, the bottom right, is that this is a chart from the Grattan Institute, and this again shows why this supply situation is so dire. Because we're fire hosing demand. So obviously every person you import from overseas needs somewhere to live, right? You need housing for them. At the same time, the Grattan Institute, which is a massive Big Australia shill, even they admitted that a very small percentage of migrants actually work in construction. So we're bringing in a whole bunch of people, pumping up housing demand, requiring homes, yet the migrants we bring in overwhelmingly do not work in construction at the same rate as the incumbent population. So we're not adding to supply, but we're adding massively to demand through our immigration system. And voila, guess what? We get a housing shortage. This is insane. And is there any wonder that we have a housing shortage? This is a government policy caused. It's deliberate. They'll never admit it to you. And these same pricks basically want to make out like it's a supply issue. But as we've seen from their own advisory council, the National Housing Supply and Affordability Council, if we just cut immigration, we can solve the housing shortage. It's not rocket science.
That's really the point, isn't it? And it's interesting, of course, the Treasury keep talking about the bigger Australia to get more tax and all of those sorts of things. So there's a reason that they put out there. But when you think of is it 1 million students or some stupid number of students coming in as well?
1.1 million enrolled as at the end of 2024.
Yeah.
And that's an absolute record. And I mean, that doesn't mean there's 1.1 million temporary student visas on issue, because some of them are dual enrolled, etc. So they get counted twice. But irrespective, mate, the number of students we have in the country, if you count international student graduate visas, 600 and whatever it is, 1,000, plus graduate visas, about 250, plus all the ones that have gone from a student visa onto a bridging visa because they've overstayed the visa, they don't want to go home, they've appealed it to the Administrative Appeals Tribunal. There's a lot of those too. The number is off the charts. And, it's just one component of it. But the fact of the matter is, Australia is we're importing renters into a supply constrained market, which is leading to a rental shortage. It's not rocket science. You can't import hundreds of thousands of renters every year and then not have enough rental properties for those renters, or new rental properties come on board, and then expect magically there not to be a rental crisis. I mean, rental growth has slowed down, and slowed down for a couple of reasons, because the affordability is just, we've hit an affordability ceiling. That chart at the start from CoreLogic, or Cotality, they call themselves now, showed that households are spending a record, at the end of 2024, spending a record share of their income on rents. That's on the right-hand side. So there's only so much blood you can squeeze from a stone. When they're already spending so much, they can't afford to spend a whole lot more. And the way households then deal with that is they then move into group housing, they stay at home longer, so kids don't move out of home, all this sort of stuff. And this is the kind of stuff you don't see in the statistics. So there are ways to ameliorate the higher cost of renting. And again, the vacancy rates, as you saw before, crash through the floor. There are ways to do it, but it's not optimal. Like, it's not optimal to have people not being able to move out of home and having to live in group homes when they shouldn't have to, and spending such a high proportion of their income on rents, all this sort of stuff. And then it wrecks them trying to become a first home buyer, because typically when you're buying your first home, you rent first, right? So that's what I did. I moved out of home, moved in with my now wife, whatever. We rented for, several years, saved up a deposit, bought a house. But if you're paying so much more on your rents, you can't save that deposit. So the way the government's papering over the cracks is they're like, oh, okay, they can't save the deposit. You know what we'll do? We'll just reduce the deposit to 5% by guaranteeing 15% of the mortgage. That'll suck more people in the market. But in the end, it's, as I said before, it's self-defeating, because you're just going to bid up house prices. And we're going to end up with a more expensive housing market, i.e. prices will be higher, and households carrying larger debts than they otherwise would. And you're back to square one, actually worse off than you would have been if you hadn't done this policy. And that is the Australian situation writ large. It's all can kicking. It's all temporary band-aids on top of band-aids, but they never actually want to solve the underlying problem. And again, I'll argue till the day I'm in the ground. For me, the number one, issue here is the government is just growing the population like a science experiment through this forced high migration. In the 60 years following World War II, up until the mid-2000s, so up to 2004, net overseas migration averaged 90,000 per year. We'd only ever exceeded 150,000 in 2 of those years, and only just exceeded 150,000. Between 2005 and 2019, the COVID, net overseas migration averaged just over 220,000. So it went from 90,000 on average for 60 years, jumped up to 220,000 plus, just over 220,000. Again, in that 60-year period, we only exceeded 150,000 twice, and only just, to 220,000 being the norm. And then now, since COVID finished, we've been averaging, 400,000 plus. Is there any wonder that we have a housing shortage? It's insane.
Yeah, but deliberate. Insane, but deliberate is the point. And it was interesting. Somebody a little earlier, Mr. Blister, asked this question, which is quite relevant. Interested if you had data on what percentage of new migrants are experiencing mortgage stress and rental stress. In fact, I made a show, I think last week or the week before, and the rental stress is highest in the first generation migrants. It's the highest proportion of my cohorts. So a lot of people who come into Australia immediately get themselves into rental pressure. Not surprising because of the affordability, but they're also showing up in the mortgage stress data as well, because quite a few are buying out. If you think of Point Cook, for example, areas around there, or if I take a Melbourne example, and they leveraged up, got big mortgages, but they're also struggling with the cost of living. So what you're finding is a lot of people who are coming into the country are actually now dropping directly into the stressed bucket, which again is more nonsensical thinking.
Absolutely, and I'd argue that the cohort that are most harmed by this high immigration policy is actually recent migrants, because they've come over here. They tend to have less savings. So obviously there is a cohort that are extremely rich, right? But most wouldn't be, and they wouldn't have as much family help potentially. So they can't just go and stay at home longer, save up for a deposit, etc. And as you said, they tend to live further way out, so they're stuck commuting long distances and blah blah blah. So this is a policy that's absolutely bad for everyone, really. And for that reason, the Australian Population Research Institute does an annual survey on migration and on migration attitudes, and they find that migrants also oppose Big Australia. So tend to oppose Big Australia. So more than they not quite as much as the incumbent population, but they also oppose Big Australia immigration, and they also want immigration to be lower as well. So and for good reason, because it makes their life harder. If you're living out in Western Sydney or Western Melbourne, in one of these growth areas, it's pretty bleak, and you're just getting crush loaded every single year. And in the case of Melbourne, I can't speak for Sydney as much, but in the case of Melbourne, you're not getting any infrastructure. So a couple of growth areas in Melbourne, so Melton, so out Wyndham, Melton and Bacchus Marsh, they don't even have an electrified train. So we started stuffing migrants into that place at about 2000. Right, we've been doing it for decades. They're still running on diesel trains. At the same time, the Victorian government is spending, it's going to end up being to build the thing probably 120 billion, and to build and run it about 200 billion according to the Parliamentary Budget Office. They're building this 90-kilometre orbital rail loop in the middle suburbs of Melbourne, which nobody asked for, and basically is totally unnecessary to go between places where you'd never want to go anyway. It's going to be totally underutilized. It's going to bury the state in debt. It's going to suck up the infrastructure budget for a generation. At the same time as the poor sods out in the West who don't get this train are still stuck using a bloody diesel train. And, and then they just want to force more. And those are the areas that are supposed to receive the largest share of new migrants. So this is just disastrous policy here. It really is.
Absolutely. And it's interesting, A23 asked, thanks to Super Chat as well, exactly who is winning from high migration? Because there are some winners.
Absolutely. So it's the growth lobby, right? So the growth lobby are big business, big property, and the education/migration industry. So your universities, your private colleges, your migration agents, and that whole racket there. So there are certainly winners, right? So if you're a Jerry Harvey or Harry Triggerboff or whatever, if you're a Jerry Harvey and you run Harvey Norman, there is nothing better than big migration for you, because that guy, Harvey Norman owns their warehouses, so they got the land appreciation on the land holdings. It's basically a big land bank. They get to sell, growing the population 2% every year means 2% more growing customer base, more people to sell white goods and imported crap to. Those guys win. The banking sector wins. More people to lend money to. Great. Property industry wins. More demand every single year for what you're selling. Universities love it. VCs can get paid over $1 million here. The senior executives cream it with all the international students, et cetera, et cetera. So there's a whole industry around this stuff. The Australian Treasury, I've said, is basically a growth lobby now, because the federal budget benefits from high immigration because they collect 80% of taxes. They get all the personal income tax, and importing migrants, most of them end up working, obviously. So you pay higher income taxes. They get all that. They get the uplift from company taxes. So as Jerry Harvey sells more imported crap to all the extra new residents, they make more profits. The federal government gets a cut of that, goes to the federal treasury. The problem is the costs aren't borne by the federal treasury, right? The costs are borne by the state governments, local governments, the ordinary punter in Australia who, gets to see all their state government assets get sold off because they've got to sell them to try and, pay for all the extra people coming in you end up building toll roads everywhere. In the case of Sydney, you got toll roads left, right, and centre. So you used to be able to drive around there 25 years ago and avoid toll roads. Now you just get fleeced by Transurban. And why are you getting fleeced? Well, they had to build all these roads to keep up with the massive population growth foisted upon them by the federal government. So this is basically, there are winners and losers here, but unfortunately the average punter is a loser of this policy. Whereas, big business, big property, education, migration, racket, and the federal treasury love it. And that's why they push this garbage on us.
Yeah, and I will make the point that some of the mainstream media channels are very much fixated on the growth agenda and on the high migration agenda. And if you should ever mention, the migration question, you are immediately classed as a racist or, antisocial or whatever. But the truth is,
a right-wing nut job.
Yes. But the truth is, this is by far the biggest conundrum that we face as a nation, because we can't go on going on like we're going on, right? Because house prices will continue to rise. The ability to be able to serve the population in terms of healthcare, in terms of water, in terms of other resources, in terms of getting around. I mean, it's more and more impossible. And, whilst the lobby will say, well, Australia's a big country, surely we can accommodate a few more people, we're cramming them into smaller and smaller and smaller, which takes us quite nicely into the next discussion point, which is about, do you want to live in a shoebox?
Yeah, that's the future. So, you don't have to be a rocket scientist. If we're going to grow our population by 13.5 million people in the next 40 years, and most of those people are going to end up in Sydney, Melbourne, Brisbane. Yeah. The capital cities. So all that means is we're going to be squashed for space, and we're going to end up having to live in high-rise dog boxes, which is suboptimal. So, hilariously, this is the middle graphic there. This was printed in the ABC last year. It was from the New South Wales Productivity and Equality Commission. They used to be just called the New South Wales Productivity Commission. They term woke. They want to add equality in there. Good luck to them. They proposed that that in order to make, improve supply and affordability in New South Wales or in Sydney, we just need higher towers, smaller apartments. So get rid of minimum apartment sizes, get rid of car spaces or have much fewer, have less storage, get rid of rules on natural light, smaller balconies, all this sort of crap. To basically build shoeboxes, like really poorly built, crappy shoeboxes, so we can build more of them. That's their big solution to the housing crisis. I mean, come on, slow down demand, for God's sake. It's ridiculous. And then, the chart on the top left there, this is some data from the ABC, which they put together, and they showed that the percentage of apartments built in Sydney, Melbourne, and Brisbane recorded in the 2021 census showed overwhelmingly their 2-bedroom or below. So about 80% of apartments in those three cities were just over half a 2-bedroom, about a quarter were none or 1-bedroom, so bed sits or 1-bedroom. And only 14.5% were 3 or more bedroom, and there was nearly 7% that are not stated. But we're just building shoeboxes, right? Like, can you raise a family in this stuff? If only 14.5% of apartments being built 3 or more bedroom, how the hell do you raise a family if this is the future that we've got? And I'll tell you why it's the future we've got. It's actually forecast. So in the middle at the bottom there, we've got Sydney's dwelling composition. This is from Urban Task Force. They've used this chart before. So they brought out some projections. They're about 5 years old, so they're not current, but it was slightly just before COVID. And they compared the 2020 to a 2016 actual housing stock of Sydney. So in 2016, 55% of dwellings in Sydney were detached. So now it'd be about 50%-ish. Back then, there was 30% were apartments and 14% were townhouses. By 2057, the Urban Task Force projects that only 25% of Sydney's dwellings will be detached. 50% will be apartments, obviously shoeboxes, and a quarter will be townhouses. Now, that is a massive, complete transformation of a city in a very short period of time. And what it means is that the future is shoebox living. And, they're not going to be cheap, because as the bottom right chart from Michael Matusik shows, he did some great work from the ABS. He showed that, the whole notion that building apartments is going to lead to lower house prices is delusional, when it costs so much more to build an apartment than a detached house or townhouse. So you can see on the left-hand side there, he's got the cost of building. So this is about 6 months old, this data. So it would be close to about 600,000 now to build an apartment, versus about 450, or probably pushing 500 now for a house. And townhouses were actually pretty good value relative. But the whole notion that you can just plaster our cities in high-rise dog boxes and expect them to be affordable is just laughable, because it costs so much to build them. And also, obviously, the land component. I mean, obviously, you do save on the land component with apartments versus houses, but land is expensive everywhere, which just means that the cost of building a new home, building the home and then selling it with the cost of the land is just uber expensive in Australia. And we are basically, unless we slash immigration and try to stabilize the population, we're going to have mega cities. So Sydney would be 8.5 million people by 2060. Melbourne's tipped to be over 9 million. Brisbane, roughly the size of Melbourne currently. So the future here under this equation is high-rise shoebox living and very expensive living, and most likely we'll be renting. Future Australians will be renting because they won't afford to be able to buy. And maybe the government wants this, doing all this build to rent stuff, whatever. We're going to have corporations take over everything. And I guess it's the old World Economic Forum. You will rent and you will be happy. You'll own nothing to be happy, because that's the future.
You've got no choice but to do that. And I guess if we broaden the conversation slightly, build to rent, which is one of the things that the government's been pushing, that's going to allow some international investors to come in and build more stuff specifically for renting. But of course, it will be quite expensive stuff. And as you say, the economics don't necessarily work. We know that a lot of the construction sector cannot build and make money at the moment for all sorts of reasons, not least because of the high cost of materials and labour and all of the other barriers that are there in terms of actually on the construction side. So there is no way that we can get to build what we actually need to build. And then we mentioned earlier on the poor quality of construction, the very thin walls, the lack of sound dampening, and all those things. So the quality of life in those high-rise areas are actually pretty awful. And it's interesting that I have one-to-one conversation with people. The number of times they complain about the noise levels and the poor quality of construction, even in relatively newly built stuff, suggests that this is actually building a shanty city.
Yeah, and it's even so. I wish I had the data in this slide pack, but the New South Wales Strata office. So the New South Wales government last year, I think it was, they released a report into the quality of the high-rise construction across New South Wales, and what they found is over half of high-rise developments during the boom. So there was a massive boom between 2016 and 2020, roughly, in New South Wales and across Australia, I should say, huge high-rise apartment boom. What they found is that just over half of all high-rise structures they built had serious defects. So, leaking balconies and all sorts of stuff, like just serious defects is what it said. And, and Four Corners and Current Affair and, have done studies done segments on the massive cost of strata fees tied to these new developments. So it's not just fixing, faults, and there's a lot of faults. As I said, there are severe defects in just over half of all the buildings built, but also just the exorbitant cost of the strata of these things just adds to the cost. And here's the thing: so the Victorian government, the New South Wales government, the Albanese government's own targets, they want to build this. They want to accelerate supply. But by doing so, if it was actually possible to meet Albo's fantastical housing target, what do you think the quality would be like? Right. So we had the big, I'll just go back actually just to show Albo's housing target here. So you can see that big spike in construction back in the mid to late 2000s. So between 2015 and 2020, that was predominantly high-rise apartments. That's what caused that spike, which drove the record of 223,500 homes, housing construction, right? That was an apartment building boom. Over half of those apartments built, just over half, according to the New South Wales government's own study, had serious defects. What does it mean when you rush construction and you build as many homes as you can quickly? It means that your quality gets degraded. None of this is rocket science, right? But the federal government wants to accelerate supply to keep up with its manic population growth, its manic immigration. What do you think that's going to do to construction quality? We're going to have more corners cut. We're going to have another, high-rise defects boom like we had, 10 years ago or less than 10 years ago. Unfortunately, you can't Australia just, there's a speed limit to how quickly we can build homes and do it well. And unfortunately, the government just, wants to basically ramp up construction, build masses of high-rise apartments, and the quality is going to be crap because we've seen how this story plays out before. We saw it, we lived it, right? So instead of going down this road and making it all a supply issue, how about we cut demand, right? How about we go back to historical immigration settings like we had pre-2005, whereby for 60 years we ran 90,000 net overseas migration. We exceeded 150 twice in that period. How about we go to those sorts of levels? And guess what? If we did that and we kept the immigration system to family reunion, getting rid of elderly parent visas and all those sorts of destructive visas, but just, partners and very highly skilled migrants, very highly skilled, not the semi-skilled, semi-low paid ones we have at the moment who are called skilled. I'm talking over $100,000 earnings each. Go back to that model, and we wouldn't need to build all this housing for them. We wouldn't have to build all this infrastructure. We'd solve the housing shortage. We wouldn't be constantly, driving around in congested cities and with the traffic congestion getting worse and worse every year, and then have, our cities becoming construction sites 24/7. We wouldn't have to do all this stuff. That is the logical thing to do.
Absolutely. And I was making another point. It was actually made in the chat earlier on as well. Of course, we do have another issue, and that is we've got more natural disasters. We've got rising sea levels in some areas and more inundations. So, in fact, some of the property stock that already is there is actually not really fit for purpose either, because it was either built in a floodplain or it was built in areas that is now flooding. So, in fact, if you look at the overall supply-demand imbalance between what's required and what we've got and the housing stock we've got, you've got to turn the dials down on future demand. You cannot build to meet what we've got at the moment, which takes you, well, it's back to migration. Migration is the big question when it comes to actually dealing with this. And, even the government's now saying it. So this is really, really important for people to understand. There's another angle here as well. And that, of course, is the overall productivity in Australia, which is going down and down and down. And I would argue that the housing angle on this is part of the productivity problem. But then, of course, you bring in other angles as well, which says we have a really, really big productivity problem.
Yeah, absolutely. So interestingly, the Productivity Commission put out a report last week looking at Australia's productivity performance since the pandemic, and which has been, well, it's been abysmal for longer than the pandemic. So the middle top chart there from Justin Fabo, that plots Australia's GDP per hour worked, which is a measure of labour productivity, against other countries. And since 2018, we've had the worst productivity performance in the advanced world, pretty much. We've had no productivity growth since 2016. It's been very poor. Now, there are a whole lot of reasons for it, but the Productivity Commission, and in fact, Ken Henry former Treasury Secretary, gave a interview recently to Joe Walker, I think it was, and he was asked about productivity, and he said that the fundamental driver, and the Productivity Commission said the same thing, the number one driver of Australia's productivity growth over the long term has been, this is the single biggest factor by far, has been what they call capital deepening. So that's basically, it's the capital labour ratio. So what that is, it basically means when you give workers more tools, more equipment to work with, whatever, they become more productive. So I've used this example before. Maybe it's not the best example, but it's easy to understand. If you operate a cafe and you've got two baristas working one coffee machine, and those two workers can put out 100 coffees an hour. If you double the number of workers working on that one coffee machine to 4, you're not going to double the output. Right, you're not going to suddenly do 200 coffees an hour because they've got to wait for each other. The kitchen will get congested. They'll bump into each other, etc. So you get lower productivity. Like, you've doubled the number of workers, but your output shrinks. So unless you give them another coffee machine, so they've got 2 for 4 workers instead of 1 for 2, you're going to get lower productivity. And obviously, I'm assuming they're each worker is equally productive, right? Effectively, this is what Australia's done since we've run this big migration. So the chart on the right-hand side comes from Jared Minak. He did a fantastic chart, but this has been raised by Ken Henry, by Productivity Commission, not as well by the Productivity Commission, by Jared Minak, of course, by Alan Kohler. He brought up Ross Gittins, another Michael Plum, who works for the RBA. They've all mentioned this capital deepening problem Australia had. And Several of them, like Jerry Minak, have actually pointed out that Australia's high rate of immigration is a contributing factor. Now, the reason why I say that is obviously Australia's population, as I said, has grown by 7.6 million people this century. And, as a result, 8.6 million people this century, 46%. And as a result, we've grown the population aggressively, but we haven't had enough business investment, enough machinery, enough infrastructure, enough housing to keep up with that population growth. And we've all seen it. You drive around the cities, it's more congested than ever, which means you got less infrastructure that makes you less productive, takes you longer to get anywhere. So our amount of capital investment hasn't kept up with the population growth. And as a result, we've had this capital shallowing. So we've actually got the capital labor ratios fallen to zero effectively. And that's the chart on the right. And our productivity growth has suffered. Now, if you go to the bottom middle chart there, it's a pretty crude chart, but I've just plotted Australia's immigration rate against our GDP per capita and our productivity growth. You can see there's a negative correlation. Obviously, correlation doesn't equal causation, but if you couple that with Jerry Minak's chart on the top right, it's pretty compelling. So if we're going to, the upshot here is if we're going to grow the population by 13.5 million people in the next 40 years, which is the plan, another Sydney, Melbourne, Brisbane, you're going to need another Sydney, Melbourne, Brisbane worth of business investment, another Sydney, Melbourne, Brisbane worth of infrastructure, another Sydney, Melbourne, Brisbane worth of housing, etc., just to keep the productivity, the amount of capital to labour the same, right? So you're going to need to replicate what's in those three cities all over again just to keep the capital to labour ratio the same. And if we don't do that, we're going to get capital shallowing and we're going to get worse productivity growth. We're going to have, and I cannot for the life of me see how, because we haven't done it the last 20 years, how we can possibly grow by 13.5 million people, the projection, over the next 40 years without productivity suffering. Because we have to replace the infrastructure and the business investment, et cetera, that has become degraded because it depreciates. You got to replace what you've lost through depreciation and wear and tear. But then you got to add to make up for all those 13.5 million people. And we just can't do it. And as a result, Australia is just going to be in this productivity trap. And the same has happened exactly, that chart on the top right from Jeremy. I wish I'd put it in here, but there's one for Canada, because Canada's gone through a similar population explosion and it is almost identical, right? The National Bank of Canada did a chart almost identical. They've also had a capital shelling problem. And guess what? Canada's productivity sucks as well, as that chart shows. And Canada's had almost zero GDP per capita growth in a decade. Ours has been a bit better than that, but still very poor. So this is basically another cross against this big Australia policy. If you're just going to bring in loads of people every year, you sure as hell better provide enough infrastructure for them, enough machinery and tools and other capital for them. And you sure as hell should also provide enough housing for them. Because if you don't do those things, a nation's productivity suffers, and Australia's productivity has suffered, and so has Canada's, for that very reason.
Yeah, absolutely. And sorry, the dogs went off because we had the bin man come.
Oh, that's okay.
So I had to mute my mic and then, dear, no, this is a really important point though, isn't it? That the productivity question is linked to the property question, is linked to one other, and that is the energy question, right? Because you can argue that productivity is partly a government jobs question. We've got more people working in the NDIS, et cetera, funded, government-funded jobs. But we've also got this massive energy crisis as well, where the costs of energy continue to rise. And so the costs of manufacturing is getting to the point where it's impossible, which is why manufacturing is getting more and more unlikely in Australia. The costs to households are also very high because the cost of energy is very high, despite the government's subsidies, and they announced another 10% rise for some states, recently. So we've got this massive conundrum of all of these things latched together, and there's no holistic joined-up thinking anywhere that I've seen, from government at least, to try and actually really tackle this really important thing, because there are levers that could be pulled.
Oh, absolutely. And look, to its credit, the coalition had an excellent lever during the election. So, I've said this before. Australia is committing absolute energy suicide. We are swimming in coal. We're swimming in natural gas. We've got everything you need to have cheap electricity and cheap gas. Obviously, we're the world's biggest coal exporter. We export 5 or 6 times more coal than we use domestically. Right, a lot of that coal goes to India, China, Japan. We export 4 times more gas than we use domestically. On the East Coast, most of that gas goes to China. On the West Coast, it goes to Japan and China. So, logically, you'd think instead of exporting so much, wouldn't it be smarter to keep a bit of that for ourselves, burn it ourselves, give ourselves cheap energy? We should have the cheapest energy in the world because we have so much of it. And then if we did that, the world's carbon emissions wouldn't be any worse because it gets burnt somewhere regardless. And in fact, in the case of gas, it's actually worse to freeze it and then put it on a ship because you lose a lot of gas in the freezing process. It uses a lot of energy, right? If you just burn it here domestically, you wouldn't have to go through the freezing process. But logically, it would make more sense to export a bit less, give ourselves enough of this stuff, keep our coal-fired generators going, keep our gas-fired generators going, have cheap and abundant energy. And if we did so, our manufacturing would be far more likely to compete because cheap energy would be a competitive advantage for Australia. Instead, we've made it a curse. We've given ourselves uber expensive energy. We're basically shutting down. The plan is to shut down, reliable base load generation like coal, etc., and replace it with intermittent and uber expensive renewables. And I'll tell you why they're expensive in a sec. But more importantly, in the short term, on the East Coast, we've engineered a shortage of gas, despite the fact that we export nearly 3/4 of that gas. Now, the chart on the top right shows that in the last decade, since we opened the Gladstone LNG terminals in Queensland, we've doubled East Coast gas production. But we've also supplied the domestic market with 25% less gas. So we've just exported. We've exported heaps more and we've supplied ourselves with less. And the East Coast gas price has, tripled, right, since we did this. So we've given ourselves expensive gas. Now, I know there'll be someone who watched this going, oh yeah, but most of the gas is coming from Queensland and blah blah blah. How do you get it down south to Victoria? Well, it's pretty easy. We've got a north-south pipeline that operates less than capacity most of the year. It's only in the cold winter months that it's at capacity. We could easily expand that pipeline. We could build a few storage tanks down south. We already have one called Iona, but we can build a couple more. You fill up those storage tanks in summer when there's when during the off season when not as much gas is needed to use in winter. That's what they do in Europe, US, other places. Not rocket science, easily solvable. But most importantly, what we need to do is we need a reservation policy because East Coast Australia is the only gas exporting jurisdiction in the world that has zero reservation policy, right? So Western Australia has it, and they've got cheap gas. Right? They're required to supply Western Australians with 15% of all gas. So if you open up a new gas field in Western Australia, 15% of that's got to go to Western Australians, and they've got abundant gas and it's cheap. Which means electricity is also cheap because they use gas in the electricity burning process. On the East Coast here, we don't have a reservation scheme. We're the only place exporting region in the world doesn't have one. And as a result, we pay the highest gas prices out of any gas exporting region in the world on the East Coast. Absolutely stupid own goal here. Now, the coalition during the election had an excellent policy to basically force suppliers. It wouldn't have affected existing contracts, which will start rolling off in 2030 anyway. But the gas companies they've got their existing contracts, which they don't want to break for sovereign risk and blah, blah, blah. But they're also exporting uncontracted gas, right? So instead of supplying to Australia, they're actually exporting a lot of that stuff. And the coalition was going to force that uncontracted gas to be supplied to the domestic market. The way it was going to do it was going to impose export levies. So if they tried to sell that gas, they have to pay a whopping tax, which would force them to effectively sell it to the domestic market. If they didn't sell to the domestic market, the Treasury would raise revenue. Labor called that a thought bubble. It lambasted it during the election campaign, which made me think that the reservation idea is dead. But in the last week or so, Labor has suggested that it's looking at reservation. So we might still get it, hopefully, but we really need to, because if we don't get it, the counterfactual is the Victorian government has just approved LNG import terminals. Down south, there's one planned for Port Kembla in New South Wales. South Australia is looking at one as well. If we don't do this, the East Coast gas price is going to rocket from export parity prices of about $12 a gigajoule. So what I mean by export parity, it's basically the export price before you've frozen and put on a ship. But if we start importing, we're going to be paying import parity prices, right? Which is basically the export parity price plus the cost of liquefying, which is expensive, plus the cost of transport, and then the cost of converting it back into gas. And that'll end up being about $20 a gigajoule. So if we don't reserve our gas and we start importing gas, the East Coast gas price will eventually get to about $20 a gigajoule from $12 currently. That'll then feed into electricity prices, because gas is one of the marginal price setters in the wholesale market, right? So if you have expensive gas, it then pushes up whenever you have to burn gas as users peaking, it then pushes up prices across the entire East Coast electricity market, which means the electricity price will go up. So this just means massive energy inflation if we don't do this. But there's another problem, Martin. It's also this mad push for net zero and renewables. It just makes no sense. Again, I don't understand how a country that is 1% of global carbon emissions, thinks it can save the world, is happy to sell 5 to 6 times more coal overseas to places like China, who burn with impunity, burn 30% more coal than the rest of the world combined. They're the biggest coal producer. They're the biggest coal user. India burns tons of coal. We sell it to them as well. How is it that we have thought it's a good idea to sell our coal, export tons of it, like literally the world's biggest exporter, but then deny it to ourselves in the name of net zero? Same goes for gas. But the Albanese government has set a renewable energy target of 82% by 2030. The Victorian government has set a renewable energy target of 95% by 2035. South Australian government, those nutcases who already have the most expensive energy in the country, they're already about 70% renewables across the year. They want to get to 100% by 2027, which means they're going to shut down all the gas turbines, which just makes no sense. Now, here's the problem with renewables. Renewables, i.e. wind and solar, are intermittent because they rely on the weather, and we never know when a weather event's going to come. We don't know when we're going to have a wind drought, when there's going to be, as we had over the weekend in Queensland, New South Wales, cloudy skies, rain, etc. So solar was useless as well. It is intermittent and unpredictable. Now, as of September 2024, Australia had an installed wind capacity of 13.3 gigawatts, and wind throughout last year accounted for about 13.5% of Australia's total energy generation. So it sounds pretty big, right? The problem is, and these charts just come straight from the National Energy Market. You can go and look at the real-time energy use, etc. You can also look back 40 or 48 hours. I've pulled out a whole bunch of charts over the last week or so where we've had wind droughts across Australia. And of course, it's winter, so solar's crap as well. And you can look across the markets there. You've got the National Energy Market top left. That's the whole East Coast. We had, sorry, my eyesight's a bit crap. Was that about 75% plus hydrocarbon energy over a 48-hour period? Bugger all wind, bugger all solar, bit of hydro, but you can't really increase hydro because we've got fixed resources there. South Australia. So South Australia is held up as Australia's renewable energy champion, the mainland's champion, because it's, as I said, about 70% plus renewables over the year. Well, guess what? They had a wind drought too for 2 days, and they had 60-odd% of gas and dirty diesel, and the same goes for the other markets. The fact of the matter is, this notion that we can replace our stable baseload power, again, you can just look at all the coal generation in all those markets other than South Australia, which is the top middle. They don't have coal, they shut that down. But the gas is the that blue color, that sort of greeny blue color. The notion that you can magically replace your non-weather dependent, can burn 24/7 reliable baseload power with a power source that is intermittent, that only works when the wind blows and you never know when that's going to be, and solar, which is only good during the middle of the day, but only really good during the non-winter months is just delusional. And the fact of the matter is, if we're going to go down this road, we're going to need to build out so much of this stuff. And you're going to have so much storage and batteries and bloody pumped hydro and all this crap that it's going to cost us a fortune. And even if we do that, we're going to need hydrocarbon backup to get around these wind drought, because wind droughts can last for days on end. And that just means we're going to have an exorbitantly expensive system. And I've actually got an example here. I'll just run through it quickly. I did this on Queensland Radio, and I modelled it off a Milner and coal-fired generation station in Toowoomba. So that's a medium-sized 850 megawatt baseload coal generator, about 130 k's from Brisbane. I've just modelled on that. In order to replicate that with wind, right, you need, and I'm assuming the state-of-the-art wind turbines, the best stuff. So most wind turbines in Australia generate 3 megawatts each. They're the current ones, but there are some new ones being built. They're the new whiz-bang ones that are bigger and everything. They can do six megawatts, right? So I've been generous. But to replace that 850 megawatt single coal-fired generator, 130 k's from Brisbane, with one set of transmission lines that can run 24/7, regardless of the weather, you need 140 turbines just to get the nameplate. What I mean by nameplate, that assumes those 140 turbines run at their maximum capacity the whole time, if they never do. Now, wind power has a capacity factor of 30% on average. So what that means is that wind turbines only get about 30% of their stated capacity on average throughout the year. So if you use that means that we need more than 450 wind turbines to get the average electricity output of that one single medium-sized coal-fired power plant, right? Now, the purchase and installation cost of a wind turbine, I got this off a website on Australia. The website says it ranges from $6 to $10 million for a 3.5 megawatt turbine. Well, guess what? These are 6 megawatt turbines. They're bigger. So the cost would be probably 10 to 15 million. Additionally, so that's per turbine times 450. With we're talking some heavy costs here, but that's not even the start of it, right? So on top of that, you need a spider web of transmission lines. If you're going to have 450 wind turbines that are going to be located a hell of a lot further away from Brisbane than Toowoomba, they're going to be out, God knows where, spread out all over the place. You're going to need to build transmission lines to every single wind turbine, right? And connect it to the grid. And then you're going to need to bulldoze a whole bunch of land to construct service roads to each of those wind turbines, because they have to be serviced every year and you need to have access to them, right? So going to clear a whole lot of wildlife as well to build dirt roads and that sort of thing. And if you want to put those wind turbines on top of a hill, you got to clear all the trees off that hill too, right? So it's very environmental here, you see. And then you got to add the cost of storing the wind power, because it's based on the weather, obviously, right? We don't know when it's going to be windy. Some days you're going to get, well over 850 megawatts because they're going to be operating at near full capacity. You're going to get way too much power because the wind's strong. But other days you're going to get bugger all because you're going to have extended wind drought that can run across the entire state. So you need heaps of pumped hydro or batteries or whatever to store that energy. Costs a ton of money, right? Because energy, it's always got to be available when demand's there, right? So you got to match supply with demand. And the only way you can match supply with demand with renewables is through batteries and pumped hydro. Otherwise, it just doesn't work. So the cost is you can just see the cost here. 450 wind turbines linked with tons of transmission, linked with hydro and batteries and all this other crap so you can store it. Cost is a fortune, right? And then even if you have all that stuff, you're then going to still need fossil fuel generators to remain on standby, because you're going to have periods where the wind is still for a hell of a long time and you're going to run out of that pumped hydro and battery storage. So you still need to keep gas turbines or whatever on standby to backstop your energy for the time when wind and solar collapses, which happens a lot, right? So you can see how the costs here are just enormous. Keeping a baseload generator on standby is bloody expensive. You still got to maintain it. You got to have staff there already, whatever. It's going to cost a lot of money. And the upshot is that this transition to renewable energy future is going to cost a bloody fortune, right? It's going to result in a less reliable energy system because it's going to be based on intermittency. Nobody knows when the weather system is going to come along and stuff everything up. It means that your energy bills are going to rise because every time you build these transmission lines or whatever, it gets added to the regulatory asset base. and then it gets added to your bills. Taxes are going to go up because there's a massive amount of subsidies that are paid for this stuff, right? And in the UK, you call it contract for difference, where they have to, guarantee them a price and whatever. We're going to have more chance of blackouts because we're then going to a system that's intermittent, right? You can't control it. It's weather-based, so, very risky. And then let's just talk about the environmental costs. Coal's dirty and blah, blah, blah. Yeah, whatever. But what are the environmental costs of land clearing to accommodate 450 wind turbines in this single example, which again requires service roads to be built to go to each of these turbines? You need tree clearing and all the other stuff to make room for them. And then you also got to factor in the literally thousands and thousands of tons of concrete that are required to be poured to support these wind turbines, because each wind turbine requires like 30 meters by 30 meters by 10 meters or whatever deep of concrete and reinforced steel to hold the thing up, because they're hundreds of meters tall. They weigh a ton. You need a hell of a lot of reinforcing, and you need to have a solid base. So what about the costs of all that concrete and the environmental degradation of that? Having to pour these massive concrete slabs to hold up these massive behemoth structures across the land. And what do you do at the end of their useful life? Like a coal-fired generator can last you 60 years plus. How long do you get out of these renewables? Wind turbine, 20 years maybe, if you're lucky, tops. In fact, we're now decommissioning Australia's first wind turbine after 20 years, right? So you're going to get rid of all this crap. Solar panels, 20 years, if you're lucky. Batteries, 10, 10 until they've got to be replaced. So in the life of one coal-fired generator, you can get 60 years versus wind turbines that probably have to be replaced 3 times over. Solar panels have to be replaced 3 times over. Batteries that probably have to be replaced 6 times over. You can see the environmental damage here from this renewable push. Like it's marketed to us as green. It is absolutely not green. And the first, one of the principles of engineering or whatever is to not waste resources, right? Be scarce with your resources. Well, how many bloody resources are going into all this renewable stuff, right? Like, one coal-fired. Ultimately, I'm going to get some people are going to probably throw eggs at me for this. But ultimately, if we want a net zero, like if we want to have low emissions, we want a low environmental footprint, and we want stable energy, there's only one solution: it's nuclear. There's no other way you can do it, because one nuclear generator can take the space of about one large Bunnings warehouse. That's its entitled environmental footprint. It'll have one set of transmission lines. We could build them where the current coal-fired generators are. And you would get stable 24/7 power for about 60 to 80 years off that with zero emissions, right? Yes, they're very expensive to build, but the useful life is 60 to 80 years, very small environmental footprint, zero emissions, much less waste than what you have with this renewable stuff if you look at a life cycle cost. So ultimately, if we want to do net zero, this whole net zero thing, and want to have zero emissions, nuclear is the only answer. Personally, I'd rather just see Australia export a little bit less coal, a little bit less gas, use it ourselves, and just keep doing what we're doing and give ourselves cheap and affordable electricity and gas. And then we might actually have a diversified economy. We might actually have a manufacturing industry because they'd be able to compete. And we wouldn't have this cost of living crisis. We wouldn't have blackouts, potential blackouts, and we'd have a more stable electricity system and economy.
Yeah, and the bottom line is we should be one of the most affluent countries in the world, right, with all that gas being produced. By the way, a lot of the gas companies don't pay any taxes, which is an interesting little observation.
Crazy.
This came out today from the Australia Institute showing that Santos and the others, zero corporate tax in 2014 onwards. It really is ridiculous. So once again, Leith, we come back to some fundamental points, right? We are in a hole in Australia, but this hole is by design. It's actually based on a series of policies across housing, across the migration question, across the energy question, and I could go on. We could talk about NDIS if we had more time, but we're out of time pretty much. The fact is, it doesn't have to be like this. And in fact, the last election should have been about these very issues. But no, it wasn't. It was about, ancillary stuff. But these are the critical issues.
Oh, absolutely. They are housing. This is Maslow's hierarchy, nuts and bolts stuff. Shelter, energy, the two big ones. There's obviously other stuff as well, but this is basic, fundamental bedrock of the economy type stuff, right? And bedrock of your living standards.
Yep.
You can't have a successful modern economy unless you have affordable and abundant energy, right? we're going to make it non-abundant, intermittent, unreliable, and uber expensive. It's just ridiculous. And I know we're out of time. I just forgot to mention, Martin, that this week a report came out on Victoria. So Victoria is doing this massive renewable energy rollout, and what it found is that the cost of Victoria's renewable energy transmission lines, so the transmission lines for their renewables, is blown out to a projected 20 billion. So they said it was going to cost about 5. It's 20 billion, which is 5 times the current cost of Victoria's transmission network. And a professor of energy, I think from Melbourne Uni, he said that because the regulatory asset base is going to go up by so much, by 20 billion, that Victorians are going to see their power bills rise as a result of the transmission build out by over 50%. So that there is direct hit to if you live in Victoria, to your hip pocket of 50%, as the cost of building all this renewables crap is going to get added to the regulatory asset base, which means that they'll be able to recover it back through your bills. So it's just one example, but you can imagine this, if you do this across Australia, we go down this road, we're all going to be paying higher energy costs. And again, it's going to wreck the economy, and it's going to wreck household budgets. It's going to push up inflation and cause undue pain in what should be the wealthiest country on earth.
Yeah, and I'll just add to that, it will also increase the debt. Look at the state debt in Victoria and what they're going to do about that. Who knows? The federal debt is going to rise ahead. The costs of debt, as we discussed earlier on through the bonds, particularly long-term bonds, suggest they could be going higher later. So what it means is that more and more of the tax take effectively has to go and support the debt that we've got there, and yet we're not actually being productive to create more to be able to actually drive the economy the right way. So, the hollowing out of Australia continues. More people are homeless, more people have to spend more of their money to try and get their own housing because they've got no other option. It means there's less productivity, there's less economic activity, all of those things going on. Wherever you look, you come back to the same foundational issues that should be, one, being talked about, and they're not, and two, different policies need to be adopted and implemented because there is a route out of this. So it's not all negative news, but part of this show's purpose is to raise the issues up, and Leith, you did that on our Macrobusiness as well, to try and get people to ask these critical questions of our politicians. Why are you having such high migration? Why aren't we reserving gas? Why aren't we developing housing policies that actually provide the sort of housing that we need rather than the stuff that is cheap to produce? So many questions. This is a really important conversation.
Absolutely. And I guess, you and I have spent the better part of a decade plus trying to sort of scream from the rooftops about this stuff. But unfortunately, the top brass doesn't listen, unfortunately.
No. Well, if people want to know more and get more of your views, where do they go, Leith?
So, first of all, go to macrobusiness.com.au. That's where I write every single day on these sorts of issues. Just had a massive one on renewables, went up this morning, actually. So covered these sorts of issues. As well, I've got a YouTube channel where I just basically put up my interviews, which I do a lot of radio and TV these days. And that's it. The YouTube channel is at Leith Vo. So obviously Leith van Onselen, just put Leithvo. You'll find it. I've got one going up tomorrow morning. I did an interview with Jackie Felgate at 3AW Radio on Victoria's burgeoning debt situation. So I'll put that up tomorrow. But I just put up all my interviews there. It's just a good way to keep in touch with my media.
Well, excellent. And I will just tell you, we did a survey in the chat here. Will future first-time buyers find property more affordable? And it came back with 9% said yes, 77% said no, 5% said no change, and 9% were uncertain. So the majority of the people on the show do not believe that property prices will get easier for first-time buyers as they come into the market, which I think both you and I would agree, Leith, it's unlikely that they will because of the reasons we've discussed. These are really critical issues. I do encourage you to go and check out Leith's work over at Macrobusiness and on his website. Leith, I want you back on again as soon as we can get you back on, because there are so many critical issues we could explore. But I want to say thank you very much for spending some time with us this evening. Really appreciate it. I know that the audience did. We had 1,772 views, which is pretty amazing.
Wow.
And for a show on this topic at this time of the evening, that's pretty remarkable, and I will get more later. So thank you very much, and I'll look forward to getting you back on the show as soon as we get you on.
Yeah, thanks, Martin, and thanks everyone for watching. I'll be back before you know it. Thanks very much.
I look forward to it. I'm going to take you offline and I'll close the show. There you go. I hope you enjoyed that. Very important issues, and don't get too downhearted. I mean, step one is to understand where we are. Step two is then to think about what we can do about it. And there are some things that we can do about it if we choose to. Next week, Damien Klassen will be on, and we'll be talking about the markets and what's happened, and market ructions and bond markets, all those things in more detail. So check us out again next Tuesday for the live show. I'll be posting daily recorded shows in the meantime, of course, and all of these same sorts of things. So check those out too. Please like and subscribe if you haven't done so. Really appreciate it. And thank you very much for all those who've super chatted us. Really appreciate that too. It really does help to cover the costs. And before I go, we should just look at the dogs. Well, I've got one dog. Meteor's around the corner here, but Luna's now flat out as though she'd never moved. You heard her moving earlier on because she barked at the bins. Thank you very much for spending some time with us. Take care. Have a good evening, and I'll see you next time. This is Martin North from Digital Finance Analytics, signing off. Cheerio.